All right. Google down 4%, Tesla up almost 4%. Utilities are down substantially. Everything else is mixed. Nvidia is up slightly, Microsoft, Apple down slightly. Real estate stocks are down. Healthcare is down a little bit. Berkshire Hathaway down 2%. Yield curve is up a few basis points today. 10-year treasury yield is at 4.30. Oil at 78. Natural gas 172. Everything else pretty much flat. I see a headline that says Amazon lost nearly $1 billion on its Rivian investment last week. Rivian stock, of course, went down quite substantially after announcing earnings, or lack thereof. Up slightly today, but in the last 5 days, Rivian stock is down 34%. Any questions, comments, please request to speak. Oh no, Robert Lopinto says audio keeps cutting out. I'm not sure why that is. How is the audio on YouTube chat, guys? All right, let me know in the replies how the audio is. Robert Lopinto said that the audio is cutting out on X. Let's see what Machine has to say today. Machine, how are you?
I'm doing fine and dandy.
Fine and dandy.
There's a good George Carlin skit about sayings, making fun of sayings that don't make any sense. Like fine and dandy. Who says they're fine and dandy? Why? When would you just be fine but not dandy? Could you ever be dandy but not fine?
Fine, but I'm not dandy.
I mentioned in YouTube that Tesla's up 4% on the news, that Rivian is up 6%.
Yeah, what do you make of that?
I don't know. This has happened many times. I don't know if it's macro rotation or what. But when they move in sync, which happens a lot with EV makers, it tells me it has nothing to do with Tesla specifically. There's no news on Tesla. People are like, oh, we got to buy in. It might be EV specific. I haven't looked at other companies, but...
Well, let's look at it right now together.
I don't want to do anything with you.
Lucid stock is up 4.6%. NEO stock up 4.5%. So you're right. This is very much a EV industry kind of thing.
Yeah, but it's not like Ford and GM, because of course they're fake. Their EV business is a joke. You know, by the way, I think we need to revisit GM's proclamations 4 or 5 years ago about how many, not just how many total vehicles, but how many models of EVs they said they would be producing by 2025. I don't know if you remember this, like 2020. I remember what year it was. They're like, we're going to have 30 models of EVs by 2025 and 5 million EVs per year, something like that. And they're so far. We knew they're lying. Mary Barra is a liar, and she was lying then. We knew it. But has anyone brought this up? Has anyone grabbed those quotes and shown them to what they're producing right now and how an utter joke it is? Where is the lamestream media on this? Why aren't they doing their work?
Yeah.
Actually, I have a lot of problems. I realize, with people lately. I got a lot of problems with people who don't understand geopolitics. I have a lot of problems with Tesla fanboys. It just goes all over. You see these images of I don't know if it was a Ford truck rear-ending a Cybertruck, and Gregor truck posts the image comparison, and everyone's loving it because they see the Ford truck has got all these, imprints of a big dents, and the Cybertruck barely a scratch. And this just shows people don't understand crash worthiness and how these cars are designed to have a big crumple zone in the front of the car, but not in the rear. And I just, people, I'm not going to insult anyone. I'm way above insulting people.
All right, give me 30 seconds. Give me a minute. You can talk if you want, or you can just stay on mute. 1 minute.
If you like my contribution to these spaces, please like and subscribe to Yaman's YouTube channel and make donations to me. You can just DM me. I'll take all the money that you would have given Yaman, and you can give it to me, and it'll be better used. Do we think Yaman's listening right now? I think he's going to the bathroom. I think he's probably going to the bathroom. Probably drank too much coffee, and he really had to pee. And he didn't want to have the echo sound because he knows he would be exposed. So it's probably the right choice.
All right, is your stand-up over?
I didn't say anything.
Wes Wallen says, Android app audio keeps dropping for me as a listener, FYI. It is working on browser. So I'm seeing different feedback on audio, which means it's probably on your end if you're having cutting issues. And sounds like, according to Wes, it might be an Android app issue. So if that's the case, go to browser. Okay, let's get started. What do you think about the news that CATL will be cutting prices by half, battery prices? What do you think that means to the valuation discussion that we had on Friday?
It wasn't clear to me is that they're cutting the prices for for everyone, I guess. That's obviously a positive. I don't know if that affects long-term valuation because I don't know if those prices are what you can assume long-term. It's certainly positive news for the LFP packs that Tesla uses both in China and in the US. I mean, everywhere, right? Is there somewhere, I keep forgetting, where they're not using CATL for the short-range vehicles, which don't qualify for the tax credit. So if you can cut a few $1,000s off the vehicle cost by 50% reduction in the battery cell, I don't know if it's cell or pack level, but either way, that's going to be a significant boost to margins, possibly. And then you have the mega packs, which we're not really clear on the cost structure there and how much is the actual cells coming in versus all the other equipment. But certainly that's a lot of batteries, and again, could give you a boost in margins. I haven't calculated out. I don't know, has anyone estimated like how much that would boost margins? If you did a 50% reduction in the cell cost, that has to be quite a big deal.
Will?
Hey, how's it going? Yeah, I think the cost reduction is huge. It's going to be a huge bump for all electric cars. And that's the largest producer. It's going to be the best for them, probably.
Okay. Omar, how are you?
Hey.
We're talking about CATL slashing prices for batteries this year.
Yeah, crazy.
Let's see, there's a listener here who wants to speak about the CATL. Let's see. Machine, did you see that somebody in the audience changed their picture to your eye? It's confusing me. I'm like, is he on the speaker board or is he in the listener mode?
I did not. I mean, I'm flattered. I think that's the first time that's ever happened. I mean, I have had people put a Popeyes logo in my eye like a few weeks ago, which was great. And I was thinking I should update my photo to that. And we've had people put, disturbingly, it was disturbing, but they did put your shirtless body in my eye as well, which is an all-time classic. So I would suggest to the listeners who want to get creative, they should do that. Make my eye and add an icon so that we still know who the real machine is, but you can have your fun too. I think that's a great compromise.
Wes in live chat says supply chain and BOM costs dropping as they go to larger scale also could be key, customers lowering contracts and thus softening of price. Omar, do you think we're going to see a margin benefit in... Man, that machine, your last comment got a lot of laughs. And I missed it because I was focused on the next thing.
I don't, since you spend all your time listening over and over to these spaces anyways, you'll have plenty of time to listen to the joke and laugh by yourself alone in your apartment. No one else around.
Can you guys hear me?
Sacha, you have to stay on mute until I call on you.
Oh, okay. Yeah, I was the one who wanted to speak up with the CHL thing.
Okay.
Yeah, I think it's obvious there's going to be benefits to COGS this year. I mean, this is crazy what's happening in China. And CATL is Tesla's largest supplier, so it should cut around $300,000 of cost out of the standard range models right away.
Sacha, what's your comment?
Yeah, I just want to say, so this CATL thing seems to be getting blown out of proportion. I've been looking to the reporting for it. It's actually all based on a CNEV Post article that was based on a report out of China from the outlet 36KR. And all they've really said is that what's happening is there's a price war in China right now between BYD and CATL. They're all over capacity. They're trying to get rid of cells. And so there's a fire sale on the lower end sales, the lower end cells that the CATL produces. These are like 2C fast charge cells. They're not high quality cells. This is basically, they're trying to say we're over capacity. Anyone who wants these can take them. And so you have these low-end Chinese companies that are coming in that are, a lot of these companies are, facing bankruptcy. These are like NADA. This is like Hi-Fi was, you guys have heard Hi-Fi just went bankrupt. But a lot of these smaller companies that are kind of ready to go bankrupt in China right now can't afford these cells. And so CATL is making special concessions for them. If you go look at the CNEV Post article, and then you go look in the 36KR report, this is basically what they both say. This is not they're not maintaining margins on these. They are giving them away basically like at cost.
Omar?
Yeah, and that's good for EV makers. It lowers COGS. So this isn't sort of some one-off thing.
Sorry, go ahead.
Hold on. Sacha, you have to stay on mute. This is my second time. Okay, get the fuck out of here. Machine?
Yeah, this isn't really like some one-off thing where it's like this one battery cell is being sold and then prices are going to bounce back up. What we're really seeing in China is, first of all, just a struggling capital market environment where the property bubble has really sort of weakened things. You've got a weak stock market. This has resulted in, persistent decline in producer prices, and commodity prices have been dropping like a rock, right? So when commodity prices come down, commodity prices were very high during the pandemic. When they come down, that delivers sustained, COGS benefits to both the battery makers and to the EV makers ultimately, right? So you look at the price of lithium, for example. It shot up. Now it's back down to earth. This is a good thing. Is it going to shoot up back to pandemic levels again? No, it's not going to shoot up back to pandemic levels again. So, and then, generally there's just sort of a deflationary environment in China. And yeah, a lot of people aren't buying these batteries. There is overcapacity. All of that's true, but it has the effect of pushing battery prices downward. So, yeah, I think this is really consistent when you look at the long-term trend for like the last 10 years. The battery cost declines are pretty much right on trajectory. There was a little blip during the pandemic when battery prices shot up a little bit, but we've really seen, over a decade, massive decreases in the cost per kilowatt hour. And I don't think anyone was imagining that you'd be able to get any kind of battery pack for $56 a kilowatt hour, right now. I think Tony Seba was projecting this would, it would hit that level by the end of 2024. It actually happened a year early.
Machine.
First of all, I would like to say to Sasha, thank you for standing up and bringing credible information to the space. Otherwise, you would have some of the over-optimistic saying things like, this is going to reduce prices by $300,000, which I believe Omar said, which my brain can't process. I must have somehow misunderstood. But
I said $3,000.
Right. And still, he's wrong. Notice he didn't update.
How is that wrong?
Because they're not getting these cells. These are 2C cells limit. Tesla's not buying this crap. You may be right that there's going to be second order effects on overall demand for all lithium ion phosphate cells, and eventually downstream that reduce prices a bit. But he explicitly gave information that these are not cells that are being sold to Tesla. Tesla's not buying these cells. Tesla's not getting directly these cost reductions right now. So I think that's kind of important. So I applaud anyone in the audience for actually providing correct information in times like this where people are spreading misinformation left and right, whether it's Tesla or any other topic. And, shame on the host. Suppose Sasha,
Relax.
He interrupted Omar, but Omar interrupted me. And that's not fair.
No, I didn't even say what I was going to say. I mean, it's just not the case that there's like one kind of battery that's being discounted and other types of batteries aren't being discounted. When commodities fall, okay, so batteries are made of lithium, they're made of nickel, they're made of cobalt. when the prices of these commodities fall, the price of making any battery falls. Okay? Not just one type of battery, not just a shitty battery, any battery. Okay? And if there's a shitty battery that gets cheaper, the better batteries have to get cheaper too. I mean, I don't think anyone can argue with this. There's a long-term, decline in battery prices, and they're saying a 60 kilowatt hour battery that costs manufacturers $6,776 today will cost $3,338, saving EV manufacturers $3,000 per vehicle.
Wes says in the replies, Machine, can I just say, for example, on Friday, the Friday Space, do you know why the Friday Space is still not out on my YouTube channel? I'll give you one guess.
Did I say something? Was I even on it? Did I say something?
Yeah, you were on about half the time, and the editing work involved with that episode was insane. And why don't you edit one of these episodes and then you can criticize my rules about talking over each other?
Well, I do agree that people should not talk over each other. And that's why I think you really need to, put the restraints on Omar, who gets out of control.
Omar can talk whenever he wants.
Exactly. So you have a
yeah, it's a double standard.
Rule. Exactly.
New speakers are only limited to asking questions. They have to raise their hands. They can't talk over each other. Omar is practically a co-host here. He's been here for 2 years every day. Go ahead.
Additionally, I just went on Amazon and I'm ordering a Gumby doll. You remember those things? The name Gumby? You could stretch him all over the place. He's green. I ordered one and I'm going to stitch Omar's face to the top of the Gummy doll and then send it to him because he's able to stretch himself in all sorts of configurations to try to hold on to his point, no matter how much it's failing. So
what are you talking about? Like, what is not true here? Are battery costs not declining? Am I crazy? Is everybody who's writing about this crazy? Like, what are you trying to say here? I don't get it.
Tesla is not getting suddenly 50% off on their LFP cells. That's what I'm saying. I didn't say they're not
suddenly, but the cost of batteries is declining.
See, you can't even correct yourself. You cannot do it. It's not coded in. It's like Google has taken control of your brain and they've hard-coded in the inability for you to say that you were wrong.
What was I wrong about?
They're not saving $3,000 suddenly.
I didn't say they were saving $3,000 suddenly. Why would it be sudden? This has been a continued thing that's been happening every quarter. They're putting slides in their deck. COGS are going down. Where do you think that's coming from?
You were insinuating that this price reduction from CATL was going to lead to a $3,000 savings per car. And we now know it's not
over the next 12 months, $3,000. That's what the article I'm quoting says. The article we're talking about.
Which doesn't actually apply to Tesla because they're not buying those cells.
No, CATL is Tesla's biggest supplier, and BYD is a Tesla supplier too. They're buying batteries from both of these companies.
Google, can you fix the software bug, please?
I guess one way maybe you guys are both right is if Tesla was negotiating lower prices than the smaller players and had already captured a portion of these savings that CATL is passing on to smaller players now, that could have been reflected in the previous quarter, like Q4 results. And maybe in the next few quarters, we're going to see further reductions in battery costs for Tesla specifically, but not as much as $3,000 per car. Does that make sense?
Yes.
Yeah, and I guess the reason why I kind of brought this up is because kind of clarify that distinction, because the CFO on the last earnings call pointed out voluntarily that this past quarter savings aren't going to continue at that pace, although we can expect some further reductions in COGS, right, Machine?
Yeah, correct. This was already explicitly stated on one of the earnings. So I expect it to go down, sure. And it will track with decreases in the lithium iron phosphate prices or the lithium prices as they've been going down. But $3,000 is quite a big leap in my estimation.
Yeah. Maybe we should start putting some numbers around what we expect COGS per unit to be on the vehicle side for Q1. Do you have an estimate on that, Machine?
No, how much it's going to decrease quarter over quarter?
No, I'm looking for absolute because I know you haven't looked up the number for Q4, have you?
Yeah, you're right. I haven't.
You have no idea. This is going to be another, you're going to be like $40,000. I'm like, dude, we're already below 40. It's going to be another Nvidia.
35?
It's going to be another Nvidia $2 trillion situation.
This is you're trying to make me look bad and blowing something out.
I don't have to try. You already did that to yourself that day.
Anyways, yes, I don't know what the COGS are currently exactly, but I would say because I think it's like 35, 36,000. And whatever the cost reduction was between Q3 and Q4, I believe that cost reduction over the next quarter will be half.
I see. Yeah, this is kind of continuation of the Tesla valuation discussion from Friday. You and I were focused on FSD take rate increasing being the primary driver of a valuation increase, and Joey was, very adamant about Tesla automotive, and maybe if Tesla automotive COGS per unit come down a little bit, do you think that alone can propel the stock to $1 trillion valuation?
No, I don't think so, because those cell costs help Tesla, but it also helps other EV makers who, of course, are much worse overall at making EVs cost effectively. But ultimately means, from an investor standpoint, that there's going to be competitors long term, and that Tesla's not going to be able to maintain much high margins long term. Like that's not going to happen. Tesla, outside of the software aspect, and so it's not a long-term benefit unless what the long-term benefit to Tesla is 4680, their own proprietary cells being better. That's something that could change the valuation of the company if they're able to produce those more cost effectively, or obviously having specs that are superior to competition, things that aren't provided or around and available to other OEMs. I think that's something that can substantially affect the stock. Now, right now, it doesn't seem like 4680 is cost effective, and so to be determined.
While you were talking, I did a quick back of the envelope calculation on COGS per unit. I took total deliveries, subtracted those subject to operating lease accounting, which is 474,000 units. And then I took the automotive COGS. That gave me about $36,300. $36,300 per vehicle. Is that the number you have as well, Machine?
I have 36,299.
Good. Okay. All right, good. So
and it was about 39,500 in Q4 2022.
Okay, so you guys think we can go below 35,000 next quarter?
No.
Why not?
I think that in 12 months they could be at 33,000. There's a path there when you look at the deflationary environment in China for sure. and I'm not sure management really forecasted the severity of this situation. Like, this is what I'm trying to say. This isn't some one-off sale, okay? This is a deflationary environment that is pushing prices down fast.
Joseph Foster, you may unmute yourself and go ahead.
I got a question in regards to those battery costs. Do you think there's a world where the non-Tesla US-based EV makers basically punt on their domestic battery production, end up buying from Cattle, BYD, and Tesla ends up being the only ones that are actually getting the government incentive?
I mean, they're canceling their EV programs. You know, I don't think other US automakers
There isn't really
car
much
production.
There isn't really much domestic production from the legacy automakers. Ford isn't doing any. Ultium, which is a partnership between GM and LG, meaning LG is really doing most of it, has been kind of a disaster. They haven't really been able to produce much at all. So there aren't really many domestic battery efforts to abandon. Most of the legacy auto EVs that are sold are already using Asian batteries.
Machine?
Yeah, I was going to say something similar. That the only ones who are able to build batteries are the Chinese battery makers and Tesla, and I guess maybe Northvolt, right, in Europe are producing some. Like, there's not that many independent companies that produce batteries. And even Ford, he was going to partner with Cattle. I don't know if that's still on or if they gave up, right, to build batteries in the U.S. So I think you're going to get battery production in the U.S. still, but it might be some Chinese partnerships or Korean. And I think that will continue because the U.S., with the bill, was trying to motivate to get these things built in the U.S. I don't know so much with Europe. I don't think they have any subsidies right now. So I think in the U.S. they will continue to build. But you're right. I mean, it's not going to be anyone else other than the Chinese and Tesla, I think, and the Koreans.
Wes?
Yeah, as far as I'm aware, there's no national production other than Tesla. So for these other companies to have that doesn't seem likely.
So, Machine, did you say no on the 35,000 per unit COGS for next quarter?
Correct, because I believe you're saying over 1,000 reduction quarter over quarter. And I don't remember what it was in Q3, but I don't think it was like over $2,000 reduction quarter over quarter. So
Let me just calculate that real quick. So we have total deliveries of 435,000. 435,000 minus 17,400 subject to leasing. And then COGS in Q3 for automotive. $15,656,000,000. $37,500. So we went from 37,500 to 36,300. So you're saying it's going to be about half of that.
Right. So it went down $1,200, and you're thinking it's going to go down at least $1,300 the next quarter over quarter, and I think no, it's going to be less based on what they indicated on their earnings.
Yeah. So it's going to be somewhere between 35 to 36, you're saying.
Correct.
And I guess that depends on how well the, Model 3 Highland production ramp is going at Fremont and Cybertruck production ramp is going at Giga Texas. You agree with that?
Yeah, I mean, there's a lot of factors that go into COGS, right? We keep talking about it, assuming an equivalent mixture of vehicles and, short range contribute to COG reductions. So you're right. I don't know what the absolute level is going to be, because you could but everything I'm thinking right now on the top of my head would indicate COGS would drop less, if not go up a little bit, because you do have Cybertruck ramping, although it's still very low volume. You have the Model 3 in the U.S. not really being produced much yet. And so, yeah, they've raised the price a little bit, but that's just because they're not producing many, according to Troy. And so there's going to be lower deliveries of Model 3 this quarter, which means that should have the lowest COGS, right? I mean, still lower than Model Y. I don't know if we know that for sure, though. And so it's possible.
No, I would think the Model Y COGS per unit currently is less than Model 3 Highland COGS per unit, right? I mean, Highland has a lot of content.
Well, I'm not even talking about, right, but Highland. You were talking about what Model 3 was last quarter and what its COGS were, are now out of the equation, right? And so it's being replaced with, on average, maybe higher COGS.
Okay, so basically, until Cybertruck gets to about 200,000 a year production rate, 4,000 a week or more, we shouldn't expect further COGS per unit reductions or any material COGS per unit reductions. Lithium prices declined substantially throughout 2023. But according to the chart, lithium carbonate price I'm looking at, they've been stable since then, just below 100,000 yuan per ton. But I mean, that alone is going to lead to hundreds of dollars per unit of COGS reduction, right? So maybe in the next, even though Cybertruck deliveries are going to increase quarter over quarter, and Model 3 Highland probably has higher COGS per unit than Model Y, and that's increasing as well. So the mix is shifting towards COGS per unit until those two products ramp to volume production. Even though that is true for the next couple of quarters, raw material prices have dropped substantially in recent months, and that's going to be reflected in Q1. So it's a bit of a mixed bag, right? Does that make sense?
Yep.
Omar, we're on the same page?
Yeah, I think that there's no doubt that the raw materials costs and a lot of things are coming down for the vehicle. I think when management made comments about the pace of COGS growth slowing, they're mainly talking about the introduction of these new models and sort of the headwinds that come from ramping them. So, for example, Cybertruck ramping that as they get more deliveries out, Model 3, that may have a bit of a headwind, right? They may not, they're sort of ramping up and they may not be getting as good of a price as they might when they get these vehicles to higher volumes. But I think when you just sort of control for that, you look at sort of the raw materials cost themselves, they're moving in a very good direction. And once those vehicles are ramped, which we know they will be within 12 to 18 months, and that sort of headwind is out, then I think you could see a pretty sharp COGS reduction that sort of, reveals a lot of the underlying strength of what's been happening with this deflationary pressure we've been seeing.
All right. Machine, how many accounts do you have?
Just this one. It's the only one.
Bullshit. How many accounts do you control between X and YouTube?
I mean, I have some other old Twitter accounts that I never go on. And then I do have a YouTube account.
How many old X accounts do you have? Or X Twitter?
One.
Bullshit.
What is going on?
You have a lot of accounts. I don't believe
Is
you.
there? I mean, there's probably a lot of praise for me because I'm probably Wes too. You know, like the only rational people can rely on for information here, and so I'm probably getting a lot of praise for that. And so thank you, everyone.
Why did you miss yesterday's safety space? Do you not like being safe?
I don't feel safe in these spaces.
Did you close out your Nvidia position?
No, I still have it. We'll see. I'm not going to hold for that long, but maybe a few more weeks. We'll see.
The range of estimates for this company is kind of crazy. I mean, there are people. Gene Munster of Loop Ventures is saying price targets below 1,000 are going to, what did he say? Look foolish or something along those lines. And he's okay with more than 1,000 price targets, he said. I think you said 800, 2 trillion, right? And that's where we are right now. And you sold half of your position, I think.
Yeah. No, I think it might get closer to 900. I mean, that's probably when I would sell. I mean, otherwise I'd just sell in a few weeks anyways. But, I don't, how does anyone know for sure? Again, you have to have a lot more expertise than I do on the supply chain, demand, backlog for their products, and understanding the supply increase of competitors' products. And when those things are all going to meet and actually affect Nvidia in having to, reduce their prices, I just don't know exactly when that's going to happen, right? And so, or if it ever does enough to actually reduce their profits versus not growing as much, and that's going to ultimately affect. I could totally see Nvidia. There's definitely a case that Nvidia's, goes to 3 trillion. That's definitely possible, but it would have to be borne out over quarter of increasing earnings and no visibility of a slowdown. And we're all speculating each time that the slowdown's going to happen, but no one believes it's going to happen yet, right? I don't think anyone is thinking next quarter there's going to be a slowdown. So it's just, when does the market anticipate enough ahead of time, if they do? I feel like I'm just talking in circles.
Well, we have all three speakers right now are Nvidia bulls. I think you all have Nvidia positions, right, Wes?
Yep, I do.
Yeah. Now, Meta, who's not here right now, said in a previous space, in a recent space, that if there is a breakthrough in software, either for inference or training, that slashes demand for compute, that could be a major catalyst for this stock. Wes, what do you think about that? A potential breakthrough in either inference or training compute software that slashes demand for compute. Wes, you're on mute.
Oh, sorry. Even though I'm a speaker, the Android dropped out because the browser was dropping out, and it's not my internet. But could you repeat it? Because I think I heard half.
Meta was saying that if there is a software breakthrough on the inference or the training side that dramatically reduces demand for compute, that could be a major risk for Nvidia stock. What do you think about that? I think Wes is having connection issues. Omar, what do you think?
Well, I mean, I don't think that's going to happen. First of all, what is this breakthrough that suddenly slashes the cost of, training computer, the amount of compute needed? And, if such a thing were to happen, I think it would just actually increase the demand for training, right? If you could train a model with a fraction of the compute, it would just mean the models would perform so much better. And it would probably actually just cause people to invest more in training compute.
Machine.
Yeah, can you hear me okay?
What's that?
Can you hear me okay?
Dude, just come on, man. The editing of these things take forever. Just come on.
I was going to say, I agree with Omar on the induced demand aspect for training. I don't think the training demand is going to go down because if they reduce cost, people are just going to buy more and they're going to train more. The inference is a little bit different because you have so many devices or amount of rounds of inference that you want to do. I think those aren't necessarily going to cause induced demand from lower price. They are also going to do more rounds of inference. So in theory, if you reduced the cost of doing inference, I think it would just, reduce the purchase of inference chips in theory. And Nvidia did say that inference is like 40% of their business, so it's substantial. So in theory, that could affect their overall revenue, and margins. Obviously, a 50% reduction in compute costs for inference is a drastic thing that we can't assume will happen instantaneously. And nothing would be instantaneous. Even if they discovered something that did that, it would take a long time for people to convert their models and whatnot. But so in theory, yes. In practice, probably going to have a minor effect.
You don't know that. I mean, it's possible it could be major or minor. It could be near term or longer term. It could take time to convert models. Maybe you don't need to do as much work to convert models, right? Either way, you're making an assumption.
I am making assumptions, but my assumptions are probabilistic, whereas Meta likes to assume the extreme. So it's like no probability, it's binary. So no, I don't think costs are going to go down 50% and margins are going to go down, revenue is going to go down 50% on the inference portion. That's too drastic. But I do get his point directionally.
Yeah, I mean, if you just look at what this thing is doing, it's just going up like a rocket ship. Like, people are buying more and more of these things. And, I mean, it just shows no signs of stopping. You can get these chips, these training computers, and you can train a model that can provide, potentially insane amounts of economic value, or at least that's the thinking, right? Tesla can buy these, they can take their data, and they can train FSD. So I think the point Machine makes about inference is interesting, because they did say that 40% of their sales are now for the inference. So they're using these chips for inference. One thing that I think could threaten that is not necessarily a more efficient algorithm or anything like that, but just actually on-device inference. Like, for example, if Apple Silicon really makes this a focus, they already have a neural engine that hardware accelerates inference. If in the future more inference is done on device and less is done in the cloud, that could potentially impact the 40% of their data center sales that are for inference. But, even if on-device did take a bigger and bigger chunk, I would probably expect, their inference sales to just keep growing, just because there are so many data center applications.
Machine, would you like to talk to the technicals of the Nvidia stock in the shorter term? I know you watch those things closely.
I don't really have any update. I'd have to look at the current numbers, but they're, forward P ratio is not super high. If you expect them to earn $20 per share this year, then their P ratio will end up being 40. But they've already earned about $5 in this first quarter, or excuse me, Q4. I don't know when their quarter ends. They might be on a different calendar. And it sounds like they expect for the next few quarters at least earnings to go up. So you're probably looking at I'm going to guess like $25 in earnings per share this year. And if you look at the current stock price, it's just below 800, like 793. 793 divided by 25 gives you a PE ratio of 31. So the question, I think that's going to be a reasonable value. If you said the price of Nvidia stayed flat all year, and at the end of the year they had a PE ratio of 31, 32, I don't think people would think it's overvalued. And then they would also be looking at how much are they still growing. So I could definitely see a scenario where the price goes down from here if the market thinks and it.
Did he cut off?
Their earnings. But if they're still showing earnings growth in the latter half of this year, they will not be getting a PE ratio of 30. It will be higher. And let's say they allowed a PE ratio of 40. That's still 25% higher than where we are today. And that would put you over $1,000 share price. So, it's hard for me to estimate, in shorter term, like in the next few months, I do believe we could get to 900 and then pull back. I mean, it could just go down from here as well. I do think probably at some point over the course of this year, it will pass $1,000 because I do believe, and let's say when their next earnings reports comes out and they're growing earnings even more still, which I think is kind of guaranteed, that will probably put the market, push it over 1,000, if only temporarily.
I asked you about technicals. You talked about forward PE. That's not a technical. I hate to break it to you. That's a fundamental metric.
Well, I'm not looking at RSI. RSI, I'm sure, is saying it's way overbought. I don't plot lines. This is funny. People want to look at RSI, and you can use these indicators. I use them some. But do you really think RSI and drawing lines between the bar charts over time is predictive? Meanwhile, we're talking about AI and these insane, massive neural nets that are trying to learn every nuanced detail. And you think you can solve it with a few lines and some simple metrics? So, I only believe in the general principle of when things are too many people are buying something out of hype and that people want to take profits at some point at different time scales. I do believe in that.
Do you have a way of measuring sentiment in a stock?
Not personally. I mean, people have indicators of, volume weighted averages of purchases, but I think it would be interesting to do more sentiment related analysis where people actually do MLP analysis of, say on Twitter or Reddit for how people are talking about a certain stock. I've never done that personally. I did try to use it at some point, but I don't know. I didn't really get anywhere yet. So personally, no, it's just based on listening to people, right? Listening to what people write and getting a sense there. And I've definitely seen that with Tesla over many periods of time where people are overly bullish. Everyone's like, it's going to the moon because it's going so well already. And they don't want to sell because they're afraid it's going to rocket higher. That's usually a signal that it's overbought. And then meanwhile, conversely, when it gets sold off quite a bit, everyone's bearish, even more bearish, right? And it's kind of interesting how mentality works, where when something's already lost so much value, people are then not wanting to buy the stock because they think it's going to keep going down. And I think those are, good psychological metrics to pay attention to.
Omar, do you look at any specific metrics of technical analysis like the RSI or moving averages or any sort of sentiment analysis?
No. It's astrology for men.
I mean, I think a fact like all sell-side analysts rating a stock a buy is a red flag. Do you guys agree with that? Did you guys hear what I said?
Yeah, I agree. I mean, not necessarily always. I mean, they could say it's a buy because it's a buy, but generally they give it a buy when it goes up and they give it a sell when it goes down. They're kind of useless too.
Yeah. I think on Nvidia right now, all but one analyst is rating it a buy. One analyst is rating it hold. There's no sells. Any questions, comments, please request to speak, otherwise I'll be on mute. Joseph?
Oh, it looks like we lost a few people. I was listening to a talk with Elon and Lex Friedman. That was a few months ago. Elon was talking about the shortage of compute, which is obvious to everyone. And he said the next big shortage will be step-down transformers. I've tried doing a little research into a good way to invest in a future shortage in step-down transformers. Any thoughts? Something publicly traded?
I don't have any companies that produce transformers for you. If anybody in the audience has a recommendation for Joseph, please request to speak.
I can try asking again in another talk when we got some more people too.
Okay. Any questions, comments? Please request to speak, otherwise we'll end the space. Let's look through some news. Energy Secretary Granholm, US on track to meet 50% EV target by 2030, despite slowing growth. BYD executive on Tesla, quote, "Without them, I think the global EV market could not run so rapidly, so we respect them a lot. I think they are a partner, and also they are like a way together. We can really help the whole world." Drive Tesla Canada article says first shipment of new Model 3s arrive in Vancouver. S&P Global says, quote, "For 2023, the Tesla brand scored repeat wins for overall loyalty to make, highest conquest percentage, alternative powertrain loyalty to make, and ethnic market loyalty to make. The popularity of both the Model 3 and Model Y remain among current owners, along with the brand's ability to attract many ICE customers to the BEV space, contributed to the Tesla's multiple awards for the second year in a row. The US-Canadian parts content has been revealed by NHTSA for some of Tesla's 2024 US vehicle lineup. Model 3 rear-wheel drive 40%, same as 2023. Model 3 long range 35% versus 75% in 2023. Model Y long range 70% versus up to 75% in 2023. Model Y performance 70%, same as 2023. Model S, 65% versus 60% last year, and Model X, 60%, same as 2023. Cybertruck, 65%. Troy replied to Sawyer's post on this topic and said, in the US, Model 3 rear-wheel drive uses CATL LFP cells imported from China. Model 3 long range uses LG 2170 cells imported from South Korea. All Model Y versions use Panasonic 2170 cells produced at Giga Nevada. So this is in line with what we were talking about earlier, right, Machine? There's nothing surprising in these numbers then. Machine?
Yeah, I said I agree.
Okay. In live chat, Mile Arsowski asks, what do we know about the speed of charging Tesla cars? Let's say you are close to empty. What's the time to charge? 100 miles, 200 miles, full charge? Will this improve over time? The answer to that varies by model and by, V2, V3, V4 chargers, depending on where you're studying, what's your state of charges. So, but I think the most important thing that people should know about charging Teslas is 90% of charging is done at home. And charging is not a limiting factor. If anybody wants to kind of see how a potential Tesla ownership fits into their daily life, I recommend touring a Tesla for a weekend or so, or for a week, and commuting to work and see how it works for you. But my experience testing my friends' Teslas has been that charging is not an issue. Mile Arsowski also asks, what do we know about profitability of Cybertruck? When do we break even? At what rate of unit production? We don't know much about the profitability of Cybertruck at this time, and we're not going to know for a while, unless if Tesla tells us. But generally speaking, COGS per unit should be close to that of Model X or slightly lower once Cybertruck reaches volume production. And that means, it looks like the line is designed for $250,000 a year. So once you exceed 80% capacity utilization for the line, you should start seeing some, good numbers, solid, sustainable numbers on COGS per unit side. So that's not going to happen until later this year. And that's in line with Elon's comment that Cybertruck isn't going to contribute materially to Tesla's bottom line until that happens, either later this year or early next year. Clay?
How does Tesla's in-house design team factor into company valuation? Thank you.
in-house design team for vehicles?
Oh, for chips.
Oh. Are you talking about Dojo, or are you talking about the FSD computer?
I think just generally the in-house chip design team.
Well, I mean, it depends, but at the end of the day, it needs to reflect on either a higher revenue growth or a lower cost growth, or, more effective training that then translates to higher FSD take rate, for example. So the way to kind of account for value of a piece of a company. So in this case, you're isolating in-house chip design. You would do 2 DCFs. Okay, keep everything the same except for that one variable, and see what happens to the intrinsic value of the company. Does that make sense?
Yes. Do you think that Tesla has any possibility of going more generally into AI chip design? I know that they're working on Dojo. It's just Nvidia, they don't manufacture anything. So I'm just wondering what the difference is between Nvidia having just a really good design team and maybe Tesla has attracted some of the top talent for chip design too. So I'm just trying to figure out essentially what is the difference between what each of those companies' capabilities are.
Well, right now, we know for a fact that Tesla team is still relying on Nvidia chips for training. So unless that changes, having an in-house chip design team is not very valuable. But maybe having an in-house chip design team in the future will become valuable. In the future, maybe will allow Tesla to iterate faster, bring that functionality in-house, training chips with Dojo. And that if that's the likely future, then having an in-house chip design team is very valuable. But we don't know that for sure at this point. Omar, what do you think?
Yeah, Nvidia is kind of like Microsoft in some ways. Like, it's not an apples to apples comparison, but you think about sort of Microsoft in, let's say, the 90s or the 2000s. It wasn't that they were the only people who could make an operating system. There was the Mac operating system. There had been other operating systems. There was even the Linux operating system, which was available. Anyone could download it for free. So why was Microsoft so powerful? It's really a combination of software factors that just kept people locked into the Windows ecosystem. Pretty much everybody touched Windows in some way. It was very dominant, and they extended that dominance into the browser. Then, now every web developer has to be targeting Internet Explorer because it's so big, and so on and so forth. Like, if I want to just go download some model or some data set and train on it, everybody else is sort of using NVIDIA and CUDA. It's kind of the industry standard, right? So if I want to download, let's say, some model of Hugging Face or something and inference it, or try and train some model, a lot of the tooling, PyTorch, other stuff like that, it's really well optimized for NVIDIA because that's what everybody uses. And NVIDIA is also really optimized for those use cases. So there's been years and years of sort of just building in that NVIDIA ecosystem. It's not that they have any sort of monopoly on, math or parallel computing or training. There may even be, better chip designs, but they just have an incredible amount of momentum. They've got some of the best designers. They've got a great partnership with TSMC and CUDA, their software ecosystem. It's just sort of the industry standard. And of course, that lead can sort of chip away over time. I think Windows, for example, isn't as dominant today. You definitely have the rise of Mac, and you have the rise of Linux for sure. But even today, Microsoft Windows remains the number one operating system in the world. So how this market really plays out, it's unclear. But in tech, sometimes there are these sort of network effects. That's the best way I can summarize it. Network effects, right? Tesla enjoys a lot of network effects too. Network effects are when other people using the product have benefits. More and more people get more benefit. Because there's so many Tesla drivers, there's so many superchargers, right? It doesn't mean someone else can't build an EV, but that integration, the hardware, software, everything working together, it benefits from just sort of that momentum. So you see this a lot in tech, and it's kind of a similar ecosystem lock-in Nvidia we have today that you can, look at Microsoft or other examples.
Does that answer your question, Clay?
Yeah, it does. I just wonder if Nvidia focusing so broadly maybe puts it at a disadvantage versus Tesla designing a chip, let's say specifically for robotics and real world AI.
That was the argument that Tesla made back when they started Dojo. They said, look, NVIDIA's got so many markets. They got gaming, they got crypto, they've got computer-generated graphics, they've got all this different stuff, and we're just going to focus on training, and we can actually make a better chip than NVIDIA, and a better system than NVIDIA, because we're just laser-focused on training for deep learning. Now, since then, data center applications, mostly training and inference, have become 80% of NVIDIA's business. So it is actually becoming kind of their main thing. All of the sales growth we see is really due to this. So the only thing that can really stop NVIDIA is the AI bubble somehow popping. People somehow realizing that, this is all useless, and they just stop caring about the end product. But it, doesn't seem like that's happening right now. It seems like the opposite's happening. We're seeing more and more uses of AI, text-to-video models, which are going to require more and more computation. Things are headed kind of exploding upwards in AI.
Got it. Thank you.
Clay, do you have a position in Nvidia?
I don't. I've just been trying to learn about it in the last 2 to 4 weeks.
Omar, is there a customer concentration for Nvidia? Can, top 2-3 cloud players comprise a large percentage of their sales?
Yeah, absolutely. So you've got basically Amazon AWS number one, Google Cloud, Microsoft Azure, and to a lesser extent, Oracle Cloud. And there's a few other cloud service providers. But these cloud service providers are really buying hundreds of thousands of these chips, and they then rent them out per hour to any startup or any smaller company that can't afford to pay $40,000. So I can go use an H100 for, let's say, $4 an hour or $1 an hour or whatever, and the cloud service provider is buying it just to rent it out. So that's really the bulk of their customers. Were you able to hear that?
Yeah, I did. They never shared that figure though, right? They never shared, say, something like Microsoft, Google, and Amazon make up, 60% of our sales. I guess they should though, in their 10K maybe.
I'm sure they have given some commentary on it, but I'm not sure I've followed their earnings calls that closely to remember anything off the top of my head. I have seen some charts like on X. I'm not sure where they get their data, where they show like the amount of H100s per company. I mean, it's not just the cloud service providers, Like obviously there's companies like Tesla, probably movie companies in Hollywood, that kind of stuff, who are also doing it. But it's I wouldn't be surprised if it's more than 50% of their sales.
You would be or you wouldn't be?
I wouldn't be.
Oh, wow.
And it was interesting on the last call, they kind of talked about how, a customer comes to us and we actually refer them to the cloud service providers where they can just go get our chips right away. So there's this very kind of synergistic relationship. And then Nvidia has a product called Nvidia Cloud. And what they do with the Nvidia Cloud is essentially just like white label the other cloud products, if that makes sense. So you go to Nvidia Cloud, you're getting an instance in like one of the other cloud providers, but it's through this Nvidia Cloud interface that only exposes those Nvidia instances and those other cloud services. So it's a very kind of, like they're trying to really make them happy. They're sending customers their way. They're trying to really like get in bed together because they understand that, let's say Microsoft and, Google has their own TPU chips, for example. Let's say Google said, we really want to push the TPUs and not NVIDIA. Then, that could be, a huge issue for them if these major cloud service providers stop. So they're really focused on maintaining good relationships. And for example, Google released their Gemma model, and they said it's optimized for NVIDIA. It was kind of an open source model. You can download the weights and inference it yourself. And it's optimized for NVIDIA, so you can inference it on those NVIDIA chips. It's not optimized for Google TPUs. So I think Jensen recognizes that this is a huge risk, and he's tried to manage it very well by cultivating those relationships with those cloud service providers, referring customers their way, and just trying to make it a very loving relationship as much as possible.
I found a relevant section on NVIDIA's 10K. It's a paragraph. Let me read this real quick. Concentration of revenue. Revenue by geographic region is designed based on the billing location, even if the revenue, let's skip that one, geography. Our direct and indirect customers include public cloud, consumer internet companies, enterprises, startups, public sector entities, OEMs, ODMs, system integrators, AIB, and distributors. Now, check this next one out. Sales to one customer, customer A, represented 13% of total revenue for fiscal year 2024, which was attributable to the compute and networking segment. One indirect customer, which primarily purchases our products through system integrators and distributors, including through customer A, is estimated to have represented approximately 19% of total revenue for fiscal year 2024, attributable to the compute and networking segment. Our estimated compute and networking demand is expected to remain concentrated. There were no customers with 10% or more of total revenue for fiscal years 2023 and 2022. So it's only in this last fiscal year, 2024, there is one customer that comprises 19% of total revenue. Who do you think that is?
Probably either Microsoft or Amazon probably either Microsoft or Amazon. I don't know. One of the big cloud service providers, obviously.
That's a major risk. So what are NVIDIA's top 4 customers driving humongous revenue growth, according to some article published on techovidas.com? Microsoft, 15%. Microsoft, a global powerhouse in software, cloud services, and computing, stands out as one of NVIDIA's top customers, accounting for a substantial 15% of the revenue, according to this article. But NVIDIA's own 10K says 19%, and it's probably Microsoft, you're right. Meta, formerly Facebook, 13%. Amazon, 6%. Alphabet, 6%. So together, they make about close to half of Nvidia's revenues. That's insane concentration of revenue. That's a major risk for Nvidia. Like for Tesla, that obviously doesn't exist. That risk doesn't exist for Tesla because we have millions of customers. And there's not a single customer that comprises, let alone 20%, even 1% of revenues.
Yeah, for sure. And, you know, I think there's also sort of the China factor, the export restrictions against China. So everybody knows that they're still buying H100s and smuggling them somehow. So if there were to be, you know, sort of that were to stop, for example, the authorities figure it out, they crack down, something like that, you could see a drop off. I think part of what's fueled this explosive demand is that, and you know, the Chinese companies are extremely competitive in AI. They know that they're not going to be able to get these H100s, so they were buying extra quantities of them before those export restrictions kicked in. And, you know, they're still trying to get as many as they can before sort of all the cracks are closed. Longer term, China seems to also now trying to be developing its own chips to compete. Because if the US is going to have export restrictions and they can't buy Nvidia chips, Nvidia is essentially locked out of that market. I mean, this is a huge, like probably some of the best AI talent in the world outside the United States is in China, right? They have all the surveillance and they use AI and they scan the surveillance footage. They can identify your face, figure out who you are, the social credit score. So that's also a risk, I think, that you have a chip emerge from China, that it begins to eat a big part of the market, and that it's even exported across the world and, you know, becomes a competitive threat long term. But all of this stuff is a little bit sort of far out. Like, it is a big risk that their customers are just the cloud service providers and it's so concentrated. But do I forecast in, let's say, the next 8 quarters, any material change in the cloud service provider strategy regarding Nvidia chips? Maybe, but probably not, because their customers are really coming to them to get those Nvidia chips. And they know those customers need them. And if they're not able to deliver the capacity that they're looking for, they know the customer will go to another cloud service provider because there are others and they do have the Nvidia chips. But if, for example, there was some material slowdown in demand for the cloud products, if the tech companies didn't want as many of those GPU instances and the cloud service providers found themselves in a situation where they have, let's say, 200,000 NVIDIA H100s and only 100,000 are being rented, well, then they may slow down their orders of new systems if that growth isn't what they expected and they're not seeing good utilization of the existing massive fleet of H100s they have.
Is Microsoft working on an in-house chip to replace H100s or reliance on Nvidia?
Yes, they are.
Where does that project stand?
In the early stages, I believe. Let me see if I can Google.
Can you imagine a headline that indicates Microsoft is around, ready to replace Nvidia? A 20% slashing of revenues for Nvidia. I understand you're saying that this is not, it's not going to happen overnight, but any sort of headline that points to an acceleration of that process, I think would hit the stock materially.
Yeah, basically all their biggest customers are trying to get rid of them. So it is kind of an amazing situation. So I went ahead and commented on this Spaces thread with an article, and you can see it's an article from The Verge, one of many similar articles, and they're saying this was from November 2023, so just about 3-4 months ago. Microsoft is finally making custom chips, and they're all about AI. The Azure Maya 100, and note that they're called the Azure Maya and Azure Cobalt chip. So Azure is the name of Microsoft's cloud service. So they're making their own chips to replace Nvidia. And it said the rumors are true. Microsoft has built its own custom AI chip that can be used to train large language models and potentially avoid a costly reliance on Nvidia. Microsoft has also built its own ARM-based CPU for cloud workloads. Both custom silicon chips are designed to power its Azure data centers and ready the company and its enterprise customers for a future full of AI. So yes, their biggest customers are actively developing solutions to stop being their biggest customers. It's true.
So I guess this is Microsoft's Dojo, right?
Well, in a way, yes. Dojo is a system that comprises many, many chips, and this is kind of a chip. So yes, it is like their Dojo.
Let me read this article. See if there's anything in here that we should know about. Microsoft is finally making custom chips, and they're all about AI. The Azure Maya 100 and Cobalt 100 chips are the first two custom silicon chips designed by Microsoft for its cloud infrastructure. The rumors are true. Microsoft has built its own custom AI chip that can be used to train large language models and potentially avoid a costly reliance on Nvidia. Microsoft has also built its own ARM-based CPU for cloud workloads. Both custom silicon chips are designed to power its Azure data centers and ready the company and its enterprise customers for a future full of AI. Microsoft Azure Maya AI chip and ARM-powered Azure Cobalt CPU are arriving in 2024 on the back of a surge in demand this year for Nvidia's H100 GPUs that are widely used to train and operate generative image tools and large language models. There is such high demand for these GPUs that some have even fetched more than $40,000 on eBay. Quote, Microsoft actually has a long history in silicon development, explains Rani Borkar, head of Azure hardware systems and infrastructure at Microsoft, in an interview with The Verge. Microsoft collaborated on silicon for the Xbox more than 20 years ago and has even co-engineered chips for its Surface devices. These efforts are built on that experience, says Borkar. In 2017, we began architecting the cloud hardware stack, and we began on that journey, putting us on track to build our new custom chips. The new Azure Maya AI chip and Azure Cobalt CPU are both built in-house at Microsoft, combined with a deep overhaul of its entire cloud service stack to optimize performance, power, and cost. Quote, we are rethinking the cloud infrastructure for the era of AI and literally optimizing every layer of that infrastructure, end quote, says Borkar. The Azure Cobalt CPU, named after the blue pigment, is a 128-core chip that's built on an ARM Neoverse CSS design and customized for Microsoft. It's designed to power general cloud services on Azure. We've put a lot of thought into not just getting it to be highly performant, but also making sure we're mindful of power management, explains Borkar. We made some very intentional design choices, including the ability to control performance and power consumption per core on every single virtual machine. Microsoft is currently testing its Cobalt CPU on workloads like Microsoft Teams and SQL Server, with plans to make virtual machines available to customers next year for a variety of workloads. While Borkar wouldn't be drawn into direct comparisons with Amazon's Graviton 3 servers that are available on AWS, there should be some noticeable performance gains over the ARM-based servers Microsoft is currently using for Azure. Quote, our initial testing shows that our performance is up to 40% better than what's currently in our data centers that use commercial ARM servers, says Borkar. Microsoft isn't sharing full system specifications or benchmarks yet. Microsoft Maya 100 AI Accelerator, named after a bright blue star, is designed for running cloud AI workloads, like large language models, training, and inference. It will be used to power some of the company's largest AI workloads on Azure, including parts of the multi-billion-dollar partnership with OpenAI, where Microsoft powers all of OpenAI's workloads. The software giant has been collaborating with OpenAI on the design and testing phases of Maya. Quote, we are excited when Microsoft first shared their designs for the Maya chip, and we'll work together to refine and test it with our models, end quote, says Sam Altman, CEO of OpenAI. Azure's end-to-end AI architecture, now optimized down to the silicon with Maya, paves the way for training more capable models and making those models cheaper for our customers. Manufactured on a 5-nanometer TSMC process, Maya has 105 billion transistors, around 30% fewer than 153 billion found on AMD's own Nvidia competitor, the MI300X AI GPU. Maya sports our first implementation of the sub-8-bit data types, MX data types, in order to co-design hardware and software, says Borkar. This helps us support faster model training and inference times. Microsoft is part of a group that includes AMD, ARM, Intel, Meta, Nvidia, and Qualcomm that are standardizing the next generation of data formats for AI models. Microsoft is building on the collaborative and open work of the Open Compute Project, OCP, to adapt entire systems to the needs of AI. Maya is the first complete liquid-cooled server processor built by Microsoft, reveals Borkar. The goal here was to enable higher density of servers at higher efficiencies. Because we're reimagining the entire stack, we purposely think through every layer, so these systems are actually going to fit in our current data center footprint. That's key for Microsoft to spin these AI servers up more quickly without having to make room for them to data centers around the world. Microsoft built a unique rack to house Maya server boards in, complete with a Sidekick liquid chiller that works like a radiator you'd find in your car or a fancy gaming PC to cool the surface of the Maya chips. Along with sharing MX data types, Microsoft is also sharing its rack designs with its partners so that they can use them on systems with other silicon inside. But the Maya chip designs won't be shared more broadly. Microsoft is keeping those in-house. Maya 100 is currently being tested on GPT 3.5 Turbo, the same model that powers ChatGPT, Bing AI workloads, and GitHub Copilot. Microsoft is in the early phases of development, and much like Cobalt, it isn't willing to release exact Maya specifications or performance benchmarks just yet. That makes it difficult to decipher exactly how Maya will compare to Nvidia's popular H100 GPU, the recently announced H200, or even AMD's latest MI300X. Borkar didn't want to discuss comparisons, instead reiterating that partnerships with Nvidia and AMD are still very key for the future of Azure's AI cloud. At the scale at which the cloud operates, it's really important to optimize and integrate every layer of the stack to maximize performance, to diversify the supply chain, and frankly, to give our customers infrastructure choices, says Borkar. That diversification of supply chains is important to Microsoft, particularly when Nvidia is the key supplier of AI server chips right now and companies have been racing to buy up these chips. Estimates have suggested OpenAI needed more than 30,000 of Nvidia's older A100 GPUs for the commercialization of ChatGPT. So Microsoft's own chips could help lower the cost of AI for its customers. Microsoft has also developed these chips for its own Azure cloud workloads, not to sell to others like Nvidia, AMD, Intel, and Qualcomm all do. I look at this more as a complementary, not competing with them, insists Borkar. We have both Intel and AMD in our cloud compute today. And similarly, on AI, we're announcing AMD, where we already have Nvidia today. These partners are very important to our infrastructure, and we really want to give our customers the choices. You may have noticed that Maya 100 and Cobalt 100 naming, which suggests that Microsoft is already designing second-generation versions of these chips. This is a series. It's not just 100 and done. But we're not going to share our roadmaps, says Borkar. It's not clear how often Microsoft would deliver new versions of Maya and Cobalt just yet. But given the speed of AI, I wouldn't be surprised to see Maya 100 successor arrive at a similar pace to Nvidia's H200 announcement around 20 months. The key now will be just how fast Microsoft gets Maya into action to speed up the rollout of its broad AI ambitions and how these chips will impact pricing for the use of AI cloud services. Microsoft isn't ready to talk about this new server pricing just yet, but we've already seen the company quietly launch its Copilot for Microsoft 365 for a $30 per month premium per user. Copilot for Microsoft 365 is limited to only Microsoft's biggest customers right now, with enterprise users having to commit to at least 300 users to get on the list for its new AI-powered Office Assistant. As Microsoft pushes ahead with even more Copilot features this week and a Bing chat rebanding, Maya could soon help balance the demand for AI chips that power these new experiences. This article, I should have said at the beginning, was published on November 15, 2023. So 3 months ago. And Nvidia stock since then has surged. Since the publishing of this article, Nvidia stock has gone up from 480 to 790. Yeah, it's like an 80% increase.
I mean, I think the most damning part of the article was when they had Sam Altman in there. I mean, this is really what's been driving the whole industry. So, I mean, you know, Nvidia has always been kind of a bubble and bust company, right? It's really driven by these waves. So, you know, I think this market's going to grow a lot. Obviously, you know, some of their biggest customers want to make their own chips. And I think they, you know, there's no doubt they're going to take a much bigger share of the market. Google says they're doing 90% of their training on TPUs now. Microsoft, absolutely. Apple, Tesla, these companies that are billion-dollar companies, they have the resources to develop their own chips. And TSMC will just make chips for anyone. You just have to design it, and you give it to them. They'll make it. It's just as good as anyone else's chip. Although I believe they said Microsoft was the 5-nanometer process, and I believe the H100s, the latest ones, have a 3-nanometer process. So a little more advanced process, a little more performance there, but probably still good enough for Microsoft to train on, given that NVIDIA has 7% margins. I believe Dojo is also a 5-nanometer. So, you know, there's no doubt that their grip on the market is going to get eroded. I mean, whenever you have something that you're selling for $40,000 at 70% margins, that's just putting a target on your back for the rest of the industry. Like, hey, come after me. Look at these big, fat, juicy margins. And so it's no surprise that Microsoft's doing this, Tesla's doing this, Google's doing this. Sam Altman wants to start a chip company, right? I mean, everybody's sort of coming after them. And some of these efforts will probably work out, some of them won't. But the question is, okay, let's say Nvidia goes from 80% of the market to 30% of the market or 20% of the market. Is that share of the market they end up taking, still bigger than where they are today just because of the growth of demand for AI training and inference in general?
Yeah. Nvidia's margins are high right now. They're about 76% in the last quarter gross margin. But they've always been high. Like in the last 5 years, the average is above 60%. So the operating margin. So they've been able to stay ahead of customers trying to replace them with in-house projects for many years. They have a track record of doing that. Omar, let me ask you a question. Some people have said that Jensen has been instrumental in riding 3 waves, from gaming to crypto to now AI. Is it Jensen? Because others have said that he just got lucky with GPUs working better than CPUs.
It's an interesting question. Well, Nvidia was founded for gaming, right? So when you're gaming, you have to do a number of simple operations on a bunch of pixels. So the screen you're looking at right now, let's say it's, for example, 1,000 by 1,000 pixels, right? So 1,000 by 1,000 is 1,000,000 pixels. So let's say I want to darken the screen. I want to, shade it and then put something over. So I need to figure out what the new color values for all the pixels are. So I may say, okay, take all the pixels and darken them by 20%. So that's an operation, a very simple operation, a very simple math operation that I want to apply to 1,000,000 different pixels at the same time. So they built these chips that are really good for doing massively parallel operations, right? You can think of your screen essentially as a matrix and, just doing matrix math on all these sort of big matrices. Now, it turned out that when crypto happened, you could make those crypto mining operations that are designed to be expensive and computationally difficult. You could just do them a lot faster on a GPU. And then in 2012, what really kicked off this deep learning boom was AlexNet, where Ilya Sutskever and Alex and Jeffrey Hinton wrote this paper, and they said, hey, we can actually, train these neural networks using GPUs, and we can train them really well. So that was a big moment where it was like, oh, wow, these chips that are good for graphics, they can also be used really for massively parallelizing the AI training process. And that was a little bit unexpected. I don't think Jensen really foresaw that exactly. It was more just that, the gaming graphics cards were ready. You could buy them at Best Buy. And neural networks had been around for the 50s. But nobody really thought they could be used for anything that serious because CPUs were so slow that you couldn't really train anything. Then when they, with AlexNet, they broke the record on the ImageNet benchmark for image recognition using deep learning on an Nvidia gaming GPU, then people said, oh my God, yeah, these GPUs can actually, completely change for deep learning. And that kicked off the whole revolution we're seeing today. What Nvidia did do that Jensen deserves credit for is develop CUDA. So back when they were only used for gaming, he said, look, we're actually going to come up with this CUDA framework, which allows you to do scientific computation. So like really advanced, highly parallelized computation, not just for gaming, but also doing, compute. That enabled the crypto thing and the AI thing. I don't think Jensen necessarily, foresaw that this AI boom or crypto boom would happen. He probably couldn't have even imagined those things when he started Nvidia as a computer graphics accelerator. But because of what they did with CUDA, and many people laughed at them and they said, who's going to use a gaming's graphic card for scientific computation? But it ended up really being huge for their business. And other companies that make graphics cards like AMD and those kinds of companies have not really done as well in the computation space, even though they make graphics cards that are pretty similar. So I wouldn't give him credit for predicting crypto or predicting AI, but what I would give him credit for is really just creating the scientific computation framework that allowed any use cases that did emerge to sort of utilize their chips.
All right. Any questions, comments, please request to speak. Otherwise, we're going to end the space. Operating margin history for Nvidia from 2001 to 2023. In 2001, they were just below 20%. And then it declined with the recession after the tech bubble burst to single digits and came close to 0%. Remained there for about a couple of years. Then it went back up to 20% again before the Great Recession. And with the Great Recession, it went as low as negative 16% operating margin. Then it went back up to 10 to 20% range for 5 years or so. With crypto, it surged above 20, above 30, all the way to 38%. And since then, it's been between 20 to 40%. Lately, it's actually been lower. In the last few quarters, operating margin for Nvidia has been about 18%, below 20%. So that's kind of interesting, isn't it? Their gross margins are high, but now this is a third-party site, so kind of put the asterisk on there. I didn't go to the source here, but that's interesting. I would have expected their operating margins to be higher than that. Yeah, scratch that source. According to Y charts, operating margin right now is the highest it's ever been. Above 40%. In the last decade, it's been about 20 to 30%. So that covers the crypto wave. Before that, however, it's about below 20%. And again, negative 16% after the Great Recession. So it's up about 10-20% with these crypto and AI waves. Do you think it's ever going to decline below 20% again, Omar?
The operating margin? Yeah, it could, yeah.
Do you
Not,
think,
next quarter, but long term, sure.
Do you think there's an AI bubble right now?
Well, yeah, there's certainly a shortage of AI training chips. There is a little bit of bubbliness going on. I would caution to call it a full bubble. Bubble is usually sort of something that actually has no merit. There is actually a lot of value being created here, but there's also a lot of hype and overexcitement and people kind of letting their imagination run a little wild. So, there's a little bit of both.
So for Nvidia, we have high revenue growth driven by an imbalance in demand and supply, leading to abnormally high gross margins and operating margins, about double of what's historically normal for the company. And on top of that, we have an extremely high valuation multiples as well. So high valuation multiples combined with abnormally high profit margins and abnormally high revenue growth. All right. Any other questions for Omar? Please request to speak. Otherwise, I have a couple of questions for him on just kind of housekeeping items. Omar, people tell me that StreamYard is better for streaming. So I'm going to start streaming these X Spaces to YouTube live chat. So the audio quality of live chat is going to improve substantially. And there's going to be a visual as well. It's going to be the same exact thing that you see on X Spaces. It's probably a good start for now. That's my goal for this week.
Good idea. I mean, yeah, you could try StreamYard if I think I've used them before. I think they're good, but you also don't need to pay anybody. I think you could probably just broadcast the browser with OBS or something like that, or even broadcast from a phone, and you probably don't need to pay anybody.
Well, StreamYard is, it seems pretty affordable. It's like $20 a month. And it sounds like it's got functionality that may be useful in the future. So maybe it's worth kind of investing into the future of the space and YouTube channel. And starting to learn that, UI and the tools that StreamYard has that OBS may not, right?
Yeah, like what?
I mean, I guess with StreamYard, you can bring in a bunch of people. Like, for example, if one of the speakers or two of the, or I guess up to 8.
I mean, StreamYard's really for like, if we wanted to do this on YouTube and not on X Spaces, right? So if I wanted to get on video with you and we have a video chat and you live broadcast that to YouTube, that's what StreamYard is really good for. It could also be used for, just broadcasting a video of the X Space, but that's kind of more basic functionality that could be accomplished with free tools if you wanted to. But I mean, it says on their website, get started is free, so maybe they have a free tier.
Yeah, they have a free tier. So X is going to bring in video as well, right?
Right, yeah.
Yeah. StreamYard also allows recording of the live streams. Does OBS do that?
I mean, I think YouTube, should record it automatically, obviously.
Right.
And I think OBS can do it too, yeah.
Okay, I'm gonna do some more research. And then in the meantime, I'm gonna use MacBook Pro. This is a few years old, but it's gonna be a major upgrade to what I use, MacBook Air I use today, with 4 times the storage. And one of my followers just sent it to me.
Nice, that's awesome. That's gonna make a big difference.
Yeah, I think so. And then one of my other followers is sending a microphone. So there should be some.
Nice, okay. I mean, you sound pretty clear right now.
Yeah, I'm speaking directly into the mics of the 2 phones, but with StreamYard or OBS, I'm not going to need the second phone, I think.
Yeah, that would simplify things a lot.
Yeah. All right. If no other questions, comments, let's see. Matt Sanko says the valuations are close to irrational, but the market can stay irrational. Anyone shorting this so far has a sore butt. Henry says ARM is the best way to play the AI bubble on the short side. Interesting.
I don't know if the valuations are that ridiculous. I mean, the growth is so strong that the valuations honestly might still be kind of cheap. Like the cash flow is growing faster than the stock.
Yeah. But how far can that continue? What do you think will be a milestone or a headline or news that leads to a drop in Nvidia stock price? Let's say more than 20%.
Cloud service providers say their Nvidia training cluster is underutilized.
Right. If Microsoft says something like that, I think it could. And when I was reading the article said Microsoft is going to start offering that chip to customers next year. But the article was written in 2020.
Which is this year.
Exactly. The article was written in 2023. So next year means this year. But we haven't heard anything on that front, right? I mean, as far as the market knows, Microsoft is still soaking up as many H100s as it can get.
Yeah. I mean, is this going to impact their H100 demand? It's kind of too early to tell, but I imagine they'll kind of start going out this year. How they'll actually do, whether consumers will want them, whether they'll really work as well as the Nvidia chips. The jury's still out on that because we haven't seen it. But I expect them to continue with this effort. They're going to have a version 2 and a version 3 and a version 4. I mean, Google's on TPU version 5 already. So compute only goes in one direction. It only gets cheaper, and we only get more of it over time. So this isn't going to be something that maintains a 76% gross margin forever. That's pretty clear.
Henry Abanto in live chat says, SoftBank was ready to dump ARM for $32 billion. It's now $150 billion with only 10% of the shares trading. Next month, lockup expires. Interesting. Yeah, that's a very interesting observation. What does he mean by SoftBank was ready to dump ARM for $32 billion?
They were trying to sell it.
Really? Was that
And
before?
I think they did, or let me see what happened. Can't remember. No, they actually, they bought it. They bought the company, I think.
Yeah, Japan SoftBank has agreed. This is 2016, July 2016. Japan SoftBank has agreed to acquire UK semiconductor firm ARM Holdings in a deal worth over $32 billion. So what does he mean by that? UK blocked the deal, Henry says.
Right, yeah.
August 2023 article by CNBC says ARM files for NASDAQ listing as SoftBank aims to sell shares in chip designer it bought for $32 billion. ARM, which is owned by SoftBank, filed on Monday to list on the NASDAQ. The UK-based chip designer is looking to go public during a historically slow period for US IPOs. SoftBank agreed to acquire ARM for $32 billion in 2016. Yeah, I mean, that's a very strong indication. Thank you, Henry. Oh, look at this. July 2020. Barron's headline. Nvidia reportedly in talks to buy ARM from SoftBank for $32 billion. That's what he means, probably. July 2020. There's a growing chatter that the graphics chip giant Nvidia is taking a serious run at buying the UK-based semiconductor design firm ARM Holdings from SoftBank, which had acquired the ARM in 2016 for $32 billion. Wow, can you imagine? Nvidia could have been $100 billion more today if that deal went through. Matt Sampo says, and Henry also says it was about $40 billion. So ARM is today $150 billion market cap. So Nvidia could have added even more. Not to mention that maybe it would have allowed higher prices for H100s if that deal had gone through.
Yeah, crazy.
Does OBS allow bringing in guests with video?
Well, yeah, you can do it, but it's not going to be as seamless as StreamYard. OBS is really an open source project that just helps you manage live broadcasts. So it's more clunky. It's not as, nice of a UI, but it's also just a free product that just does the thing you want for free. So if it's something simple, like you're just, broadcasting a screen onto a YouTube live, it can absolutely do that. And it can do it, really well. Like you're going to get really good audio, just as good as what you would get if you were listening directly on the computer yourself. And of course, you'll be able to show what's on the screen.
I see. But if I do it with StreamYard, for example, as we talk about this Verge article, I can put the Verge article on YouTube Live, and it doesn't have to be just whatever is on my screen on X, right?
Yeah, maybe, just go with StreamYard. It sounds like that could be a good solution. And, after you get it up and running, you play with it, you could always look at a way to cancel it if you want. But, $20 a month is probably pretty manageable.
Yeah. With since I'm starting to do this professionally, and I'm a beginner, I don't have
it's a good thing to have for a YouTuber for sure.
Yeah. And I don't have I didn't know what OBS meant. I still don't know what OBS stands for example. Until you told me.
Open broadcasting software or something like that. Open broadcasting system.
Right. Henry says they stopped the deal because Nvidia would have had too much insight into AI design pipeline with ARM tech. Not just AI, but any design with ARM IP actually. Matt says, what theories do you have for recent large player raising capital? Who's that? Who's the recent large player? Matt. All right. Let's end it. More than 2 hours. That gives me some more work to do. I still have to get out Sundays. I'm not sure if I'm going to publish the Sundays, yesterday's space. But anyway, I'll figure it out. Thank you very much, everybody. And I will talk to you all tomorrow. Take care.